Hello and welcome to our look at the upcoming August 14th trading session. In front of you is the economic calendar, and as you can see, a lot of announcements going on during the day, but we feel more than likely Asia should be a fairly quiet session. And that's because we're looking at German GDP numbers coming out, as well as Eurozone GDP numbers during the European session. These will move the market because, quite frankly, we're concerned about whether or not the ECB will have to engage in more quantitative easing. And if these numbers are bad, the market will probably look at this as a bit of a last nail in the coffin type of situation. The euro dollar sits right at the 133 handle, which is support. And if we break down below there, the market could very easily find itself heading to the 130 handle, 1.30 handle, in relatively short order. With that, these numbers will definitely garner quite a bit of attention. As we look at the rest of the day, we have the Eurozone CPI, and that of course can move the markets as well. But these are secondary in this particular situation. Really, things are fairly quiet after that until we get into initial jobless claims and continuing claims in the United States. But initial jobless claims tend to be a little bit more important. If the number is less than 295,000, look for that to move the stock markets in the U.S. in a positive light. The S&P 500 should be positive after that, and depending on what goes on in Europe, if we get bad European numbers and better than anticipated US numbers, that could really drive the euro dollar down. After that, the next thing of any significance is the natural gas storage change. In other words, the inventory numbers. That will affect the natural gas markets themselves, probably not a whole lot beyond that. But if you are a natural gas trader, that of course is something to pay attention to, as we sold off drastically during the session on Wednesday. That could drive the markets even lower if less is drawn out of the storage tanks than anticipated. Looking at the charts, you can see that the S&P 500 does look like it's ready to go higher. We got 1950 as resistance. We haven't broken above it. A better than anticipated initial jobless claims number, meaning lower, we could break above there, and then that should send us heading back to the 1990 level. Pullbacks at this point in time, unless we have some type of absolutely disastrous number, will more than likely end up being nice buying opportunities off of short-term charts. Looking at the pound dollar, you can see that the pound just fell apart during the session on Wednesday, so we feel that there's probably continued bearish pressure in this marketplace, probably heading to the 1.65 level given enough time, and rallies should offer selling opportunities. And lastly, looking at the euro dollar, you can see that we tried to rally during the session on Wednesday. We failed. We turned around and formed a shooting star. Again, the 1.33 level we think is rather supportive based upon longer term charts. That level could be under serious pressure during the session if those economic numbers, especially out of Germany, come out rather poor. Rallies at this point in time will more than likely be selling opportunities anyways, so we have more of a proclivity to let the market bounce and then perhaps sell from a higher level if we do get some type of euro strength for the day. And with that, we've looked at the Thursday, August 14th trading session.